Welcome to Green Giants, Titans of Renewable Energy, the podcast where insights and innovation meet. Every episode, we dive into conversations with industry leaders, experts, and change makers, bringing you the stories and ideas in the renewable energy sector that shape our world. And now, let's jump into today's episode with your host, Wes Ashworth.
Welcome back to Green Giants, Titans of Renewable Energy. Today's guest is Freeman Hall, president of B2U Storage Solutions, a company helping redefine what happens to EV batteries after they come off the road. Instead of treating those batteries as waste or sending them straight to recycling, B2U has built a model around giving them a second life in stationary energy storage. Freeman brings a rare perspective to this conversation. His career spans early renewable energy investing, utility-scale solar development, and now one of the most interesting frontiers in storage, how to unlock more value from batteries that still have useful life in them. That makes this conversation much more about technology. It's about timing, economics, market design, risk, infrastructure finance, and what it really takes to build confidence around a category that did not exist at commercial scale not that long ago. With that, Freeman, welcome to the show.
Great to be here, Wes. Thanks for inviting me on.
It's a pleasure to have you. I think this is a really, really intriguing topic and very excited to get into it. As always, I'll start a little bit with your origin and your story. So you were early in utility scale solar before most people fully appreciated where the market was heading. What did that chapter teach you about just spotting inflection points before they maybe become obvious to everyone else?
Right. Well, I, as you mentioned, got involved in solar in 2005. Ted Turner and his Turner Enterprises group asked me to come in as someone to help him with a strategy to invest in renewables writ large. And at that point, taking a look at where wind was already coming up the curve as a significant source of power in many markets, certainly in the US, we felt that solar was clearly going to follow suit with the incentives that were starting to be offered for solar in Germany and in Europe, including Spain, as well as China's decision to really invest heavily in the solar industry and in increasing capacity was going to lower unit costs. And with solar becoming much more affordable, the plate was laid out and the place was set for a scale up. We saw that coming and felt that the way to go forward in the case of Ted Turner was investing and connecting the last mile, so to speak, between the customer and solar systems. And we ended up finding a company that had done larger scale integration work of solar and acquired that company. And I led that acquisition process. And then we frankly looked at a business model that would allow a customer to sign a contract for solar as opposed to paying all the capital up front. So a power purchase agreement financed by a third party was a dominant business model. Joining the company that we acquired, we changed that model to focus on signing PPAs and keeping financing with third parties. And that allowed that business to really scale. I then started another solar development company in Los Angeles called Solar Electric Solutions and moved out to LA to build that business and had good success building out over 100 megawatts of projects that we developed and built ourselves before starting my current company, B2U Storage Solutions, in 2019.
Yeah, very interesting just journey and story. And it's a useful reminder. I think the best founders are often sort of seeing around the corner a little bit, not just reacting to what the market already agrees on. And so you mentioned that too. So building, Turner Renewable Energy, and it's all become part of Fit for Solar. I guess looking back, kind of going through that and that building process, what did that experience really teach you about how new energy categories actually move from promising to mainstream?
Well, exactly like you said, seeing around corners a bit, what's coming is helpful. I think in the case of solar, we could see that the conditions were going to be right for unit costs to come down and therefore the scale to be unleashed. But because it was new, there was going to be significant uncertainties with the whole industry needing to get more comfort on financing and risk concerns that have to do with the cost of capital. Those are intimately connected, of course. And so as folks got more used to solar and more good experiences, quickly the perceived risk came down in solar. And so therefore the costs at which you could profitably deliver solar would come down as the costs of capital were coming down. And frankly, the cost of solar itself going down as the installed capacity increased. And so that applies to what we're doing now with B2U Storage Solutions. We shifted gears to focusing on deploying storage in 2019. And B2U is a company whose name essentially refers to battery second use, B2U.
Yeah.
Our insight was that a large proportion of EV batteries that would no longer be suitable for automotive use would still have substantial residual value due to a stationary storage use case that's frankly less demanding. And you can run the batteries at lower current and still get a couple thousand, few thousand more cycles at a lot of batteries that weren't, again, suitable for automotive use. So we have been pioneering here. And to your question, this has been perceived as something that's quite uncertain and quite risky. And there are real risks to mitigate. But we've found that the mitigated risk profile is substantially less than the perception of risk there. And that's sort of the thesis that the company's built around, to go ahead and do it ourselves, develop that track record, show this is cost effective and profitable. And then frankly, there's such a big need and desire for repurposing to extract that residual value that we're really in a very good spot right now.
Yeah, absolutely. And I appreciate kind of going through that and just sharing a little bit of your journey and how that all came to be. And that's kind of the macro setup, a grid evolving quickly, storage becoming more important, and then this separate realization that batteries themselves might have a much longer economic life than the industry was giving them credit for, and kind of bringing you to where you are today. If maybe you shared a bit of this, if you can expand on it. So what was the sort of the real founding insight behind BTU? What did you see that made you believe sort of second life EV batteries were not just a sustainability story, but really a serious infrastructure opportunity?
Well, it was, as I mentioned, a view we had that having been developing solar projects up until that point with our company, we were starting to see duck curve dynamics, which is sort of shorthand for when you get a higher penetration of solar in certain areas of the grid. When the supply of solar is plentiful, the prices decline. And as that solar resource goes away, in the evenings, there's still a big demand for power, and that would lead to a depressed price, and then a rising price in the evenings gets referred to as a duck curve. We frankly started deploying storage with some of our solar projects and responding to utility requests for more power with hybrid systems that would incorporate storage so that we could supply that incremental unit of solar in the evenings after storing and then discharging. Our insight was that the age of storage had arrived now that solar and wind were very much not only cost effective and reaching sort of grid parity, but really were the cheapest form of energy that were out there. Just they were intermittent and weren't like a baseload resource. Storage paired with those renewables can act like a baseload and a firm power source. And that's where we married the need for cost-effective storage with the insight that we started scaling the deployment of electric vehicles about now 15 years ago, as the Nissan Leaf was the first widely available commercial EV in the US in 2010, 2011 was first being sold. And by the time we were looking at forming B2U in 2018 and formed in 2019, we were already starting to see hundreds of thousands of EVs out there in the marketplace. And all you got to do is look in the rearview mirror, so to speak, to know that those batteries were going to start to reach end of life. And given, as I said before, those batteries do have residual value left in them relative to a less demanding use case, which is what stationary storage represents, where they're not being run at the current or amperage that they're rated for, can run for quite a few more cycles. So that was really the core insight we had, that first trickle of batteries, because we did acquire a few hundred Nissan Leaf batteries from Nissan. They had gotten batteries back because of some warranty issues. And we said, okay, well, this is the first trickle, but there's many more coming. Can we develop a technology that would avoid incurring repurposing costs? We didn't need to take that EV battery pack apart, break it down to its component modules or cells, and then add a new battery management system software, new harnesses, reassemble, retest. We could develop a technology to deploy that battery as it comes out of the vehicle and sidestep or avoid those repurposing costs. So that's the path we took with our technology. We've gotten some patents around that approach to stationary storage. And like I said before, we needed to be able to sort of not just tell folks this is going to work, but show folks
Yeah.
it was going to work. And we were in a unique place as a developer to not only develop a great technology, but to deploy it at our own projects onto the grid and develop that track record of reliability and performance. And we're now 5 years down the road with that performance data, that reliability data, showing and not just telling that this is a very reliable solution that is cost effective, is profitable, and solves a real need out there.
Yeah, I love that kind of origin story. I think so many meaningful businesses start with someone sort of noticing, a problem and also seeing the opportunity and then just thinking about it differently. And as you mentioned too, is sort of a lot of those early repurposing efforts focus on taking battery packs apart and rebuilding them, and your approach was just different and kind of just, I love the view of that, just seeing it completely different and then coming up with a solution. And then two, so kind of further on to that, so B2U's model depends on sort of preserving more of the battery pack, building the controls and software around that. I guess talk us through that, like what had to be true for you to believe that approach could actually work in the field, especially kind of seeing like that wasn't like the normal way people were going about this up until obviously your solution.
Right. Well, again, like I was saying with solar, we certainly were applying some of the same lessons that my partner Mike Stern and I started Solar Electric Solutions in 2008 after I had left Turner Renewable Energy. Mike had a long background in power system engineering, focusing on solar systems. We saw together how solar could be reliable and high performing, but it was new and just needed some time to work through that. That was how we proceeded with that business. And then we applied some of the same lessons with storage that we would need to sort of show people with a good data set how this works. And frankly, the grid wasn't all that prepared in 2019, 2020 for some of the stresses that were coming. You had a higher penetration of renewables in a grid like California, solar especially, but also wind. And you really were seeing these duck curve dynamics with a lot of volatility in pricing. So that was another thing that we were recognizing, is that there hadn't yet been a substantial installation of storage, though the need was strong. And therefore, the margins that we could see with storage systems that do profit from volatility have been very, very strong. So that was just another positive factor that was leading us to say, hey, we develop projects, we connect them to the grid. This is what we're good at. Battery storage is what is in high demand now. And we've got, we think, a better approach to a uniquely differentiated product that is more cost effective, but it's perceived to be risky and it's perceived to be perhaps unreliable. We can not only make some good money deploying resources that were operating in the California grid with very attractive conditions, with a lot of volatility. We could make very strong margins that way, while even more importantly, proving the reliability and performance of our differentiated technology platform. So it really was a nice alignment of factors, as you're speaking to. And we were applying some of the same lessons. Here we are 5 years later with a very well proven, reliable, high performing set of battery energy storage systems, both here at our first site in Lancaster, actually where I am today. We built another system deployed in Santa Barbara County in 2023. We have gone into Texas with projects on the east side of San Antonio. Our first project has just been operational at the end of the year, and have a good bit of expansion planned because, frankly, the volume of batteries looking for repurposing is expanding. Our ability to demonstrate that the mitigated risk profile is a good bit lower than sort of the perception of risk has helped to attract more investors who are seeking just those opportunities to make strong returns, but with a risk that may not be that different from the alternative.
Yeah, absolutely incredible journey. And I love that success and the growth and expansion. I do want to go back a little bit to like the early days of, you get hundreds of these, Nissan Leaf batteries, I believe, and you're sort of trying to test it and prove it out and show people it can work. Like, take us back to those early days. Like, what did that feel like? And when was that moment where you're like, okay, I think we got something here?
Well, as I mentioned, we did start with those first few hundred Nissan Leaf batteries, and Nissan themselves, because of a powertrain warranty issue, found themselves with swapping out some battery packs. The batteries they were left with were still perfectly functional and had utility, just couldn't be deployed in Nissan vehicles anymore. And we got to know some of the folks there at Nissan, and some of the folks that had done these accelerated aging tests and other studies, and themselves had a view of how they could still run at these lower current applications. And we decided to essentially take a risk and kick the tires to take these Nissans, the Leaf vehicles, and deploy in a technology that would not incur these repurposing costs as I've described. We hired some early engineers who did some great work for us. Core to what we were doing is essentially taking the proprietary communication protocol that the Leafs operated around. It's a CAN bus protocol that would allow the rest of the vehicle's systems to control the battery. And we hired some engineers who helped us essentially working hand in hand with Nissan to ensure that we could communicate effectively with the battery pack and the native battery management system software still in those Leaf battery packs. And we're looking at the right configuration and ended up coming up with a enclosure, which we refer to as cabinets, that might be the size of a small shipping container, that at those early days was still fairly low in capacity. We were only getting 340 kilowatt hours out of early cabinets, which is funny because today we're well over 2 megawatt hours and closer to 2.5 to even to 3 megawatt hours in today's cabinets. But those early ones were lower density, but were good proof of concepts. We were able to still produce those at cost-effective installed costs because when we were getting started, the installed cost for storage had just crossed below $1,000 per kilowatt hour or $1 million per megawatt hour.
Yeah.
And we were less than half that cost at the time. And we've continued to come down ourselves in cost. And frankly, as we've increased the capacity of our cabinets, it's helped to spread the costs across more capacity. So we've been able to sort of evolve and improve relative to the competition, even as the cost of storage has come down a good bit.
Yeah, absolutely. I love those moments in a founder's journey and kind of going through that. So I appreciate you sharing. So kind of going through, so once you have the insight, the next challenge is much harder, is earning trust. And in storage, especially with second life batteries, that means getting through those questions around reliability, safety, whether the economics truly hold up in the real world. And so when you first started talking about using second life EV batteries and stationary storage, what was maybe the most common reason people assumed it just wouldn't work? Or what was that sort of main pushback initially?
Yeah, great question. I think one first question that everybody has is, well, how long will these batteries work in your use case? And how are you confident that they will continue to work? And I guess the first question is, are they even going to work? So we needed, as we said, to develop that technology, deploy it ourselves at our own battery energy storage or BESS system sites. And so that was sort of challenge one, was to deploy ourselves. Now, because we had been developers and had developed projects, built projects, obviously permitted them and financed them, we had a leg up on a lot of folks. We already knew how to take this novel product that still needed to be proven to market and earn attractive revenues by going straight into the grid. So that was a big advantage for us. And we sort of knew that from our core thesis going in. So we were able to develop that technology. And as with any new technology, there's going to be a few hiccups and wrinkles to straighten out. And we had spent a couple of years deploying batteries into cabinets, initially with Nissan, moving to other types of batteries that have included Honda batteries and GM batteries and Tesla batteries and Ford batteries. We've now worked across the market with, I'd say, more than 80% of today's EV batteries we've deployed ourselves. And then you get the questions, okay, you've got it working. How long is it going to work?
Right.
How do you know it's going to be reliable? Sort of prove that to me. And the nice thing is that we've been tracking that not only have we built this, we've got our own data set. So we have a unique data set that shows the reliability and performance. 5+ years down the road, managing over 3,000 batteries, have never had any type of fundamental incident or occurrence. I've gone through a lot of the very challenging permitting and certifications because, of course, people are concerned about safety as job one, and permitting and certification comes out of those concerns. So that's been something that we've been able to demonstrate to the market, how you go through that process of getting the permitting and certifications in place, which for storage in general can be challenging, and then for repurposing specifically has some added challenges. And we've been able to then show over time that these batteries do run reliably, and that the degradation we've been experiencing is quite minimal. And so you start to see third parties coming in and saying, okay, well, we see your data and we see that degradation curve that you've started to chart out. It makes sense to us. And those are the steps that help develop that further confidence. And then beyond that, of course, is that next dimension of risk management. The first dimension being sort of safety concerns around permitting and certification. The next is, okay, I'm an investor and B2U is coming to ask me for an investment in this company. How do I know that putting money into this makes sense? And once again, we have this great track record of deploying BESS projects, initially hybrid systems that were both storage paired with solar that we plugged into the grid, essentially interconnected to the grid. And we could show them as well profitable performance of our initial projects over those initial years. So both at that first level around safety and mitigating those risks, and then secondarily around the investment perspective of demonstrating reliability and performance, as well as the ability to get financing, track some modest level of debt, take advantage of the tax credits that can be available. All of those steps we've been able to do ourselves, and again, show, not just tell. That's put us to where we are today.
Yeah. And I'll ask this question because I'm sure probably listeners are curious. And it may be a it depends answer, but thinking about that sort of repurposed battery that you typically see today and use, what is that? Like typically the life that it has left, like what do you see kind of in comparison? Like if we're comparing to, something normal, a new battery, what have you, like I'm curious just the comparison and what those numbers actually look like.
Well, we get batteries across the spectrum of their state of health, which is essentially what percentage of their nameplate capacity do they still retain. And we've deployed batteries that were degraded a good bit, that had average states of health below 70%, and really even in the mid 60s to start. Yeah. And we found that some of those batteries were operating for quite a few cycles, really a couple of thousand cycles plus. And beyond what we had hypothesized when we were first deploying those. We've also deployed batteries that were above 80% state of health and even above 90% state of health. And what we're finding is that the degradation on a percentage basis is been in a 2% or less range.
Okay, yeah.
So all you got to do is sort of do the math on that. And we're seeing that these batteries will operate again at this less demanding use case for I think it's going to depend a bit by chemistry and battery type, but they'll go to 60 and sub 60% state of health. And we've got data sets to prove that. And we're, of course, developing further data sets with ever more battery types as we go. So that's just kind of a feel for what we're seeing.
Yeah, that's great. I appreciate going through that. I'm sure a lot of curious minds were wondering, so that's cool to see that. You did mention this, and I want to just dig into it a little bit more. I think there's a big difference between saying a battery still has value and really just proving that value can be extracted economically, and thinking about investors, but also customers, partners. Like, what are the things that they needed to see before they began to view this as bankable rather than experimental?
Yeah. Well, that journey, it continues for B2U. Yeah. We've been developing out and deploying further projects. We've got investors that have been with us and have had some good experiences and continue to want to invest further, which is great. But the marketplace is still, understandably, looking skeptically at things that are new. We've been pioneering what amounts to a novel asset class, and we continue to be effective pioneers there, again, with a growing track record of strong performance. And we're finding that our cost of capital is falling, but there's room for that to continue to fall as we become more proven with further bankability. We have been able to attract a bit of project debt and have taken advantage of tax credits, as I mentioned, which is important in financing renewables and battery storage. But I would just say that will be a journey that will stay on for quite some time. But given the experience we've had to date, the supply of batteries that are looking for repurposing because everybody wants to get the maximum value out of a battery before it is recycled, which is essentially destroying the battery as it is. And so because of those dynamics, we feel like we're in a great place to continue to demonstrate further bankability, bring in more investors, and keep on growing.
Absolutely. Definitely see that being the case and getting just better and better as you go. Part of this you shared too, having the advantage of just being able to prove this in your own projects rather than waiting for someone else to take the first leap. How important was that sort of controlling, getting the model where it needed to go, and talk us through that?
Really important. When you're doing something novel that is pioneering, it's also bleeding edge. And bleeding edge is a term for a good reason, because new things are uncertain things, and uncertain things imply risk. And the nature of business is to avoid risk where you can, but still earn a profit. So you do have to have a bit of an entrepreneurial mindset that the view is worth the climb, because the climb is challenging to do this for the first time. And that's our perspective here. But because of the volumes of batteries and really a high percentage of these batteries that are good candidates for repurposing, we knew this was going to be a market that is worth the risk that we've been taking. The thesis we've had, as I mentioned from the get-go, is that the mitigated risk profile here is a lot less than the perception of risk. We've been able to demonstrate that ourselves with our own projects, and we've got a big market and a great deal of demand that's out there right now, which helps folks see that they can join with us, work with us, maybe invest with us, and make a nice return themselves and further our mission, essentially to be the leading integrated repurposing provider for the automotive industry, whether that's an auto OEM that finds themselves with batteries or the dismantling industry at end of life that's already processing many millions of traditional internal combustion cars and now are shifting to EVs. We think we're in a great position to sort of help solve those problems of getting that residual value extracted, and obviously doing so in a way that's safe and can scale and performs well.
Yeah, I think being able to just prove it in your own projects initially feels like just a major strategic advantage. Owning the proving ground can compress learning cycles in a way that's very hard to replicate otherwise, and cool to see that. But now that you have sort of these years of operating experience behind the model, what has the real world data taught you that maybe theory alone never could have?
Yeah, great question. I think that some of the macro factors happening out there in the world, obviously climate is one of the big drivers and macro theses that many investors are investing around. And I think one of the core aspects of the playbook for dealing with climate is we need a clean grid, and we need to continue to have clean resources on the grid. And then we need to electrify ever more sectors of the economy. That has been happening, obviously, with transportation and a transition to electric vehicles, which has been great. We're seeing other aspects of the economy electrify. There's a tremendous demand for electricity, and that's also being driven by the AI revolution and data centers needed to expand greatly the use of online tools and AI. We've got this great tailwind behind us that's out there, and that's what we're sort of pushing forward around. Is the market needs more electricity, needs clean electricity. Intermittent renewables, which are the cheapest form, paired up with storage, is sort of a killer app that can be quite cost effective and really is consistent with that game plan to clean up and expand the grid. And I would say that the perception of risk, you've traditionally financed renewable projects around having a locked in power purchase agreement, revenue certainty. We've been able to go out and with our own projects operate in some cases as a merchant resource, and because of the volatility that's been in the market, being able to earn very healthy returns out there. I think our view going forward is that there's a big driver to expand the grid and clean energy. That's a good thing for us. I think there's some increased willingness to have some exposure, but you want to cap that exposure with a degree of revenue certainty around deploying projects. And so that's one of the things we're doing now, is finding ways to lock in a degree of certainty on the revenues and perhaps have some upside with a level of exposure, but with enough certainty that we can bring in financing, whether it's debt, whether it's tax equity or just sponsor equity, at ever lower cost of capital, which then sort of find the sweet spot between still plenty of exposure to the upside, but reducing our cost of capital to grow faster.
Yeah, absolutely. I think for as we've kind of looked at sort of the beginning and kind of the middle, and it's starting to prove itself, I think once the model starts proving itself, the conversation just shifts from technical validity to scale. And an energy scale is never just a technology question, often becomes a capital question, a structure question, ultimately a question of whether the market is ready to treat something new like infrastructure. But if for someone hearing about B2U's new fund structure for the first time, what problem does that vehicle solve? Maybe the traditional venture capital or project finance does not solve as well. And can you just talk us through that a little bit more?
Yeah, no, that's a really important question for us right now. We, as you can imagine from my descriptions here, we've had to build projects, operate projects, own projects in these first chapters of the business to demonstrate that reliability of performance. And at the same time, there's a growing demand for deploying repurposing. So we did launch a fund at the end of 2025 to take initial operating projects off our balance sheet and put it into a operating portfolio that we manage. And we brought some investors in to sit beside us to have a majority stake in that operating portfolio, where we've retained ownership but it allows us to free up some capital that was tied into the fixed assets on our balance sheet. That capital has come back to us and it allows us to build more projects and then provide those projects back to this first fund or subsequent funds. And it forms what amounts to like a flywheel effect. We can take the cash to build projects, build those projects, bring them online, place them into a fund. The cost to build is substantially less than the value and the cash flow they can generate. We can take that enhanced value back into the company, build more projects, and therefore sort of keep scaling this in what is a CapEx heavy industry, but continue to operate for us in more of a asset light way because of the funds we are now launching and scaling.
Yeah, it's a key distinction. I think often what unlocks the next phase of growth is not a new technology breakthrough always, but the right capital structure around a proven model. And you can obviously see that. You shared, I think, several things there. Maybe you've covered it all, but any other changes for B2U? So when you move from the proven projects on your own balance sheet to creating an investment vehicle around a portfolio of operating assets, like anything else that changes for you?
Well, yeah, that's the phase we believe is what the market's looking for is scaling deployments of repurposing solutions. And we, with this new model and our ability to bring projects online, bring them into separate operating portfolios, and then to recycle that cash with the flywheel effect, as I described, that's really supporting our ability to grow and to scale. We're still able to essentially be a trusted partner for the automotive industry, whether it's OEMs or dismantlers and the policymakers and regulators on this space. They know that when you work with B2U, we can realize that residual value, do so in a way that's safe and compliant, and that we also keep control over deploying those assets. And then, frankly, when the true end of life and there is no more utility to those batteries, it's easy for us to swap out a battery from a cabinet or a cabinet out of a system and ensure that that battery is recycled properly at end of life. And that's an important part of sort of what I'll call lifecycle management in the battery ecosystem. And that's what the regulatory schemes that are out there. Europe has implemented what's called the Extended Producer Responsibility, or EPR framework. And that essentially means that folks who made the battery need to account for what happens to the battery end of life. And they've got some rules which are referred to as the battery passport to ensure that you can track the battery to end of life and that it is being handled properly. And some version of that responsibility is finding its way here in the US. So a company like B2U is that trusted partner that can realize that value, but also ensure that the batteries are handled properly at true end of life.
Yeah, it makes so much sense, honestly. Just thinking about just switching a little bit to just your model, where it sits at this intersection between automotive, energy, manufacturing, software, infrastructure, finance. Which of those worlds has been the hardest to align, and why?
Well, that's a great question. Lining everything up is what's going on here. So there are a number of dimensions that we're operating around. And I would say there's a number of important dimensions of risk. There's a number of boxes to check. I tell everybody that, as I've mentioned twice on this call at least, the perception of risk we understand is high. The mitigated risk profile is very manageable, but we've got to be able to sort of show, not just tell. And so that's led to our whole strategy around the business and our ability as developers ourselves to develop a good, strong technology platform that was novel and innovative, deployed ourselves, come up with a data set that proves that to the outside world. And then with that proof in place, sort of scale with innovative models that can allow us to serve the market in ever larger ways. So it's been the integration of those various dimensions on the technology side, in the business model side, on fundamental risk management, on going forward and doing some novel things and permitting some things that hadn't been done before, and helping third parties, understandably starting skeptical, to work with us, to get comfortable, see how we're doing things, and then with that comfort and confidence growing, to expand. And now, as we're expanding to bring in more partners, more capital partners, that whole process continues, and I think will for some time. But it's aligning those various dimensions that has been fundamental to what we're about and what we'll continue to do more of.
Yeah, that cross-sector complexity is easy to underestimate from the outside. Often where some of the most consequential execution challenges really live, and you've been able to execute on that. It's amazing. Something else you shared with me too. So you said there's now more battery supply available that can currently be deployed. What's the real bottleneck now? Is project development, customer confidence, certification, financing, market structure, or something else entirely?
Well, yeah, really, it's all these dimensions of risk that we've been talking about, Wes, that have held back the space, and understandably so, because there are a lot of boxes that have to get checked to get folks comfortable. And we've been working on all these dimensions of risk and of concern. And you can imagine that's going to be a challenge for any other entity that's looking to be in the same business that we're in. We have seen, frankly, in this space, we've been pioneering repurposing now for 6 years, and starting in 2019. Just recently, you've seen a large recycler that has raised a good bit of money to recycle batteries in 2025, said, hey, this repurposing business is pretty interesting and may well scale faster and be more profitable than the recycling business. And we've really welcomed seeing that type of progress, because it's been accelerating the erosion of the conventional wisdom, where the conventional wisdom was always before that a battery would be on wheels in automotive and then go straight to shred, and that battery would be destroyed and then recycled for the next generation. And we have set out to prove otherwise, that residual value could be extracted safely, reliably, profitably, and we've been able to demonstrate that. But now that we're ready to scale, and frankly, the industry would like to see this scale, having some other capital come in and demonstrate that this is a smart way to go has been helpful. And I think we're positioned very well because of all the work we've done and the unique data set we have over 5 years that is not really replicated out there. But we're going to need a lot more folks to come in, invest in this space, and help deploy repurposing solutions so that the maximum value of every battery can be realized before it is recycled and the next generation is created from that.
Yeah, I love those thoughts and kind of that broader vision for the industry, and kind of welcoming others to come in and participate as well. And sure, you've been a pioneer and will continue to be that, I think, as you go. So I want to zoom out a little bit for the sort of final part of the conversation. This is where Second Life storage starts to connect to the broader forces shaping energy right now, is policy and domestic manufacturing, supply chain resilience, and the longer term question of how we manage battery value just across the full life cycle. So there is more supportive policy environment emerging for domestic storage and battery deployment. In practical terms, like, what changes for a company like B2U when those incentives and domestic content advantages line up in your favor?
Yeah, Wes, another great question. That has been the case here, as you're inferring from the big beautiful bill that just passed last year. That has obviously been challenging for aspects of the industry. Certainly solar and wind incentives knocked down, and there were also consumer incentives to purchase EVs that were eliminated coming out of that legislation. But battery energy storage, stationary storage, did retain its incentives for quite some time to come. Which of course we welcomed. And as you're also saying, the concern around foreign entity of concern, FEOC, or prohibited foreign entity, PFE concerns, are a substantial aspect of the new legislation. And that's another thing that is a positive for us. We are taking used batteries that have been driven by folks here in the US, and we are deploying them into stationary storage and can qualify for the investment tax credits that include, frankly, some additional bonuses where there's domestic content, right? We want to see and encourage made in the US types of products. And so that's what the domestic content incentives are for. We've been able to qualify for that. And meanwhile, we aren't using battery equipment, other aspects of our storage systems that are sourced from FEOC or PFE entities. And so it's been really a positive story for what we're doing. You're going to see a lot of the leading equipment that has been in the battery industry really have challenges with the FEOC and PFE restrictions that will really restrict the use of incentives going forward. And meanwhile, we're in a position, because of our status, redeploying these batteries, avoiding FEOC and PFE issues, qualifying for domestic content, added incentives that, in addition to our cost advantages we start with, only actually helps us in the environment we're facing right now.
Yeah, absolutely. We'll take any positive tailwinds we can get, and being a part of like it actually benefiting and helping, that's great. And so I always tell people too, like, there are always these parts of the market. Some are affected differently than others, and kind of knowing where that's at. But looks bright, obviously, on the horizon for you. So the EV market has been more uneven than many expected, and in some ways, it has actually increased the availability of batteries for second life use. So we've covered a tiny bit of that there. What does that say about the resilience of this model, even when maybe adjacent markets are volatile, as we just described?
Well, yes, the EV space is going through some tumultuous times, and we have seen a huge ramp up, of course, in EV sales, both here in the U.S. and North America, and then the wider market, which the U.S. or North America represents about 10% of the global market in EVs. And with, again, the elimination of some of these consumer incentives in the legislation last year, you are going to see a dampening of adoption of EVs. Of course, but we already have a better part of 6 million EVs on the road in North America. That's a lot of volume. And we still are selling well over 1 million. And we did cross the 2 million per year EV threshold at some point here. And we'll probably stay flat, perhaps see some small declines. But overall, we're still seeing real growth. The wider market, which is 10x the North American market, already sees well over 60 million EVs on the road globally. So the demand for repurposing, to put it mildly, is massive. And even with some of the hiccups in adoption, it really isn't diminishing the need to have really scalable solutions to see repurposing and ways to get that highest and best use from the battery before it is recycled and the cycle starts again. So we're not loving what we're seeing in terms of some of the policy choices that are out there, but it doesn't have that big an effect on the market that we're chasing.
Yeah, absolutely. And as we get closer to time, a couple just wrap up questions here. So if we sat down again, like 10 years from now, what would need to be true for you to say, like, the industry finally got battery lifecycle management right, and B2U has been successful and done what you wanted it to do? Like, what does that look like 10 years from now?
That's a great question. I think that we will see that markets working as they are tend to pursue the highest return on assets. We, I think, are proving that repurposing has a important space and an important role to play in realizing that highest return on these assets, for which very substantial investments are being made. So I'm very confident that we'll see repurposing play that role in scale. We think B2U is really well positioned to be one of the leaders in deploying and realizing that value add that repurposing represents. And there's really a lot of incentives too. If you think about strategic issues, the industrial policy is ever more important when we think about geopolitical issues. And the U.S. has an incentive where we're bringing large factories to make electric vehicles and their batteries to the U.S., onshoring, if you will. And we want to make sure we're keeping those materials here domestically. Again, repurposing can help ensure that the highest and best use for those batteries, once the batteries are no longer suitable for automotive, is happening here. And then ultimately, at true end of life, those batteries are recycled and those materials are kept here to be made into the next generation of batteries. So what we're doing does have some very strong, I'd say, pull around these important geopolitical and critical mineral, critical material issues. I think we're going to see that in 10 years be another big win for what we're up to. And I think that our focus has always been on delivering results and not telling, but showing. And that's part of our culture and part of what we're about as a company. And I think in 10 years from now, with the track record we're already developing, that will be something that will have a wider awareness of what we're up to. But that said, we're not a consumer-facing entity. We're going to be working with probably large players and operating a little bit behind the scenes. So I don't know that we'll have a hugely high profile, but I think that B2U will have made a big difference given the substantial role and the value add that we can play.
Yeah, absolutely. And I think a great place to end, I think, opens the door to a bigger vision of what successful should look like for B2U, but also for the entire ecosystem. So with that, Freeman, this was just a fantastic conversation. I really appreciate how clearly you unpacked not just the promise of the second life battery storage, but the discipline, data, persistence required to make it real at commercial scale. There's a tendency in clean energy to talk a lot about innovation and abstract terms, but what stands out in your story is just how much of this has been about doing the hard work of proving a model, building confidence around it, and then creating the financial structure to help it grow. So thank you again for joining us and sharing the journey. To everyone listening, thanks for tuning into Green Giants. If you enjoyed this episode, subscribe to the show, leave a rating and review, and then share this with your network. It really helps us keep these conversations going. Thanks for listening, and we will see you next time.
This episode of Green Giants, Titans of Renewable Energy, was brought to you by Lee Group Search. If you enjoyed today's discussion and are looking to recruit top talent for your company or find your next career opportunity in the renewable energy sector, visit leegroupsearch.com. Let's continue driving the future of clean energy together. Until next time, keep pushing toward a greener future.